Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Let's get to Bill Lee. He is the chief economist, also executive director at the Milken Institute, normally in Santa Monica, California. Today, Bill joins us from Henderson, Nevada. Bill, it's always a pleasure. Thanks so much for making time to chat with us. Can I begin by getting your reaction to what you heard out of Jackson Hole, what Fed Chair Jay Powell had to say?
Well, I and every other person in the markets breathed a sigh of relief when Chair Powell finally said, we're ready to move, and we're going to move unless something drastically goes wrong. And I think that's really great, because right now I think it's pretty clear that the U.S. economy is starting to slow down quite a bit, and the inflation dragon has really been slayed. If you look at financial markets, the break-even inflation rates have now dropped to below 2% for 5-year break-evens. And I think that's a very good sign that the expectations are pretty well anchored at the 2% level. And now they're rightly turning to what's going on with the economy and the labor market.
What do you think about the Fed's timing? Are they a little late?
No, I think they really got it right, because as recently as last June, the financial markets were still pricing break-evens at about somewhere between 2.3 and 2.5. So I think the markets were not convinced that inflation really has been put on a clear trajectory down to 2%. The latest set of data we got really, I think, provided that convincing evidence, and the Fed reacted pretty quickly to that new evidence.
So do we get the soft landing that many people have been hoping for, or is there really a bit of risk here that we may tip into recession? What do you think?
I think the recession risk is pretty low. I think the fact that people worry about the unemployment rate going from 3.5% to 4.3%, triggering the so-called SOM rule, is really silly. Because every economist you talk to, who at least knows anything about markets and the labor market, will tell you cannot have a recession if there are no layoffs. Right? That unemployment rate rose because people said, wow, it's really a good time to look for a job. And rather than staying home, I can get a side gig or a part-time job and make ends meet better. And that's where the weakness is. If there's any weakness in the economy at all, it's in consumption. Because since the beginning of this year, consumption continues to grow like 5% at an annual rate, but income has dropped down to maybe less than 3%. So we're going to have to keep an eye on how consumption can be sustained. And right now, only the rich people are doing it.
Listening to, and I'm getting a little concerned maybe that the earnings for the equity market might begin to deteriorate a bit. Is that essentially what you're pointing to?
Well, I think the equity markets depend upon not only the interest rate, which the Fed is saying we're lowering, but also on expected profits. And right now, the tech boom, I think, is a pretty solid backing for operating profits going forward. There's a very strong relationship between the amount of investment in technology and software and the rise in corporate profits. But I'm more concerned with the income distribution in the United States and how it is that it's really the rich people who are sustaining consumption because they're able to dip into savings that have been enhanced by the rise in the stock market. Ownership in the stock market, is about 70% of the stock market is owned by the top 10%. And if you add pension funds and everything else, then you can bring in maybe the rest of the 40%. But the lower 50% of the income distribution own barely 2% of all stock market and pension fund assets. They're the ones who are having to get second jobs to make ends meet. And they're the ones that are accounting for why it is that payrolls were growing so rapidly when the household survey showing the number of people who are getting jobs didn't grow at all.
So what does that mean then for the election in November, the presidential election? If everything that you're saying is accurate, and I don't say that, or I'm not saying that it isn't, how does that show up at the polls?
Hey, Doug, that's where I think you have the complaints that it's the economy stupid, that really so many people are saying, hey, you might be telling me that GDP growth is great, but I'm having trouble making ends meet. The cost of living is still so high. I have to get a second and possibly even a third job in order to make ends meet, to meet necessities. And the elections, I think the polls in the elections are showing exactly that. Why is it that people complain that it's inflation that's the big problem? It's not. I think in layman's term, it's not so much inflation, but it's the price level. Costs are too high and wages are not high enough. Incomes are not high enough and haven't grown high enough in the last several years to make ends meet.
So what's the recipe for or a solution to the problem? Is it tax cuts? Is that one way of approaching it?
That's kind of like a temporary salve and a Band-Aid on things that would boost disposable income a little bit. But right now, that would open a hole in the deficit even wider and cause the U.S. to issue even more debt, which eventually will place even more pressure on interest rates. The way to do it is to enhance productivity and to incentivize companies to invest in the technologies to improve people's productivity. And right now, artificial intelligence seems to have a lot of those ingredients all in one place. And that's why so much hope is being placed into the payoff from artificial intelligence, which in principle could make someone with a high school education as productive as someone with a graduate education right now.
Is there anything to be said for greater urgency when it comes to reshoring? Is that part of the solution as well?
Well, that I think has to do with having a portfolio approach to America's economy, that we don't want to so specialize in the service sector and in service industries that we lose our manufacturing base. That's a judgment about safety and soundness of our country, and less so with economics. But if you just talk about efficiency, of course, we should specialize in the things that we're most efficient in. But if you want to talk about soundness and safety and national security, then that reshoring and onshoring argument comes in big time. And the United States is willing to pay up money in terms of passing subsidies to these high-tech industries to bring them back on shore. And that has yet to pay off.
Bill, it's always a pleasure. Thanks for making time to chat with us. Bill Lee there. He is the chief economist, also executive director at the Milken Institute. Let's get to Sydney, bring in Bloomberg's Michael Heath. He is Eco-Gov editor. We're going to be talking now about the latest developments where Israel and Hezbollah are concerned. Michael, it's always a pleasure. Thanks for making time to chat with us. I guess both sides are kind of claiming credit, aren't they?
Yeah, it looks that way, Doug. I mean, as you mentioned earlier, Israel's carried out this preemptive strike with about 100 jets at 5 a.m. local time on Sunday. And that preemption has taken place, and then Hezbollah has fired about 200 missiles and various drones as well, which Israel has basically shot down most of them, or they've fallen in areas that are fairly sparsely populated. There has been an Israeli death and some injuries as well, but compared to what was expected, they seem to have really come off quite well there. Hezbollah is claiming that this is a victory at home and saying that, in fact, Israel's preemptive strike has hit targets that were decoys and that this has been a great success. And they're saying this is the end of their first stage of the retaliation for the killing of that senior commander by Israeli forces. Israel, of course, has basically, they've sustained limited damage from this. And it looks at this stage as though Israel has done pretty well out of this. And again, I guess it's a credit to their intelligence community. It's really quite amazing.
So is it too much to say then that we have, at least in the near term here, avoided the prospect of a wider war?
Look, you never say never in the Middle East, do you? But it does look that way. That both sides basically say that they've had their say here, or they've done their bit. I mean, we're going to see low-level fighting continue. That's been going on daily on the border. But the idea of a major retaliation from Hezbollah, from its Lebanese bases in the days ahead seems highly unlikely. They've said themselves that this is the end of their first stage of the response.
So, just as a way of kind of framing this was a retaliation that was put in motion to kind of answer the assassination of a senior Hezbollah commander in Beirut last month. Is that correct?
Exactly right, yes. And it's real tit for tat, because obviously Hezbollah fired a missile that hit a school sports field in Israel, and that's what prompted Israel's targeting of that senior commander. And then this commander is obviously very, very high up, a very senior official there. I mean, he was connected to the bombing in the bombing against the US in the early 80s in Lebanon. So he's a fairly senior official. So that's why Hezbollah was responding so strongly.
Is there the expectation that this could impact some of the negotiations that are taking place in Cairo now, trying to create a ceasefire in Gaza? Is that likely?
Look, it looks like that they're being kept separate. I mean, the talks went ahead on Sunday. Israeli officials went across there. There's a Hamas official who was in Cairo, not directly at the talks. Now, there's reports, and nothing's been stated publicly. There's reports that they've sort of broken up without any agreement and sort of Hamas at least blaming Israel for not wanting to come to the party kind of thing. But then we've got reports also of the US saying, look, they're reasonably constructive. But it doesn't look like this Hezbollah-Israel the conflict there has had any particular impact on those talks. They still seem to be deadlocked on the same basic issues that have held them up for the past 2 or 3 months.
So what is the assessment then on the ability for these sides to come together and reach a ceasefire? Are we closer now than at any other time that we have been?
Look, yes. I mean, on one, I think there was a lot more hope in the Biden administration that potentially by now we'd have a deal. And the US is putting a positive gloss on it. I mean, the Biden administration is right. There's only so much time left for these hostages. I mean, they've been in a very difficult situation for 10 months now. But at the same time, the sort of protracted dispute of Israel wanting to keep control of this Philadelphia line between the border with Egypt and Gaza to stop weapons smuggling, wanting to keep troops in an area that bisects Gaza to stop fighters from going into the north, and Hamas wanting all Israeli troops out of there. These issues still seem to be at the heart of the impasse. So the will seems to be there, and the US is certainly pushing very, very hard. Israel seems to have softened its stance a bit, but there's still no sense of a breakthrough. So yeah, that's about the best I can say at this stage. Certainly the will is there.
Michael, we'll leave it there. It's always a pleasure. Thanks for making time to chat with us. He is Michael Heath, a Bloomberg Eco-Gov editor, joining us from our studios in Sydney. Welcome our guest, James Abate. He is Managing Director, also the Chief Investment Officer at Center Asset Management, joining us on the line from here in New York City. James, always a pleasure. So it looks like we're going to get this rate cut in September. Big surprise, right? What does that do to your thinking, if anything?
Well, one thing Chairman Powell has been is very consistent in his statements that he is data dependent. And, one of the things that we've articulated and discussed in the past is that the Fed would only cut in response to bad news, not ahead of it. And when we look at what happened last week, I think the most important statistic that came out, or most important piece of information that came out last week ahead of Jackson Hole, was the fact that the Bureau of Labor Statistics essentially erased 818,000 jobs that supposedly were created in the statistics between March 2023 and March 2024. So the whole narrative that, strong employment growth was contributing to inflation, which was necessary for higher interest rates, is essentially collapsed. So, unfortunately for the last, 12 months, the old saying of, garbage in, garbage out, the data-dependent Fed has been relying upon information which has been inadequate or inaccurate, actually. And, just one of the points that we've always talked about in the sense that, there's dangers in pure top-down investing or reliance upon information because, one of the things that we've talked about in the past is, the best creation of information is putting together a mosaic of both bottom-up information and top-down indicators. And a lot of times the company information is going to be 1 to 2 quarters in advance. And when we talked about a month ago, going bullish on long-term treasuries for the first time in probably forever, we did it because what we're seeing on a bottom-up basis was CapEx budgets being curtailed, XAI, increased layoffs, restructuring charges increasing, and new initiatives actually being announced by many companies. And we could see the slowdown happening across, most of the companies we were researching.
Do you have a sense of how overly restrictive rates have been? I mean, to your point about the BLS adjustment and 800,000 fewer jobs created over the last year, I mean, are we at a critical juncture now where we can agree maybe that the Fed has been kind of restricting things to such a degree that we're right now maybe going to see not a soft landing, but something that is a little harder?
It's too early to tell. And clearly, let's remember, the Fed is now pivoting toward an easing cycle while inflation remains above 2%. And I think this is the real wild card, is that perhaps it stays sticky at around 3%, which means a higher low. So the Fed obviously has to meet its dual mandate, which is targeting both inflation and employment. So, from that perspective, we are at the point now where the Fed might be essentially continuing to ease. And I think one of the things the Fed doesn't want to do is take a step. Some have said that it doesn't want to take one step, it wants to march, meaning that it wants to go ahead with a series of rate cuts. And frankly, the real pressure when you look at interest rates hasn't been at corporations. It's really been in the real estate sector, and that's where most of the pressure has been. So this is going to be really an alleviation towards the community banks, regional banks, and the real estate sector more than it is really going to be a pocket issue for most consumers, because it's not yet going to trickle down yet into auto loans and credit cards, to any great degree.
Let's circle back and talk a little bit about CapEx that you alluded to, particularly as it related to artificial intelligence. And I think that's been the big question. When are we going to see ROI on AI? NVIDIA will report after the bell on Wednesday. What are we going to learn from the NVIDIA story here, or at least the numbers on NVIDIA?
Well, what we're going to see is that NVIDIA is probably going to double its sales again, a year-over-year basis. And they're going to see, exceptional operating leverage. And, that's really been the case across the board for earnings. If you look at the S&P 500, we've had in the second quarter, year-over-year, 5% revenue growth, but 12% earnings growth, which is demonstrating exceptional operating leverage. But it's been concentrated in the largest cap stocks, and there hasn't been yet a broadening out. And to your point specifically about AI, what you're starting to see is the companies such as Amazon, Meta, and others is a shift back where something we've written about since the beginning of the year, which is that when are the CFOs going to come to the table and start demanding some degree of return on investment on the AI investment that these companies are making. And I think as you're seeing these companies, you have to look at it from a cycle, right? The Magnificent Seven had an exceptional period during the pandemic and for 2021, where they were really the only game in town in terms of sales growth and generating tremendous operating leverage. Then they invested too much thinking that it was going to continue, which is what resulted in 2022. And now we've had essentially a period of time where they've enjoyed that operating leverage again, but now the heavy CapEx spending by the Amazons, Metas, Alphabets, et cetera, are leading them back to a point where cash flow returns are not what the market is expecting. That's leading to some rotation in the market away from the Magnificent Seven. But these stocks are still doing exceptionally well. These companies are doing very well. So it turns them basically to market performers away from being, I think, the only game in town over the last 18 months or so.
So I think we can agree that the political season is going to pick up in earnest after Labor Day. You've heard kind of the Republican side, maybe a little thin on policy, and I think the same is true where the Democrats are concerned. How is the political race at the presidential level going to impact the equity market, do you think?
I think the one thing that we can hone in on is the fact that let's look at corporate tax rates, because when you think about, the two policies that both parties have put forth. So let's remember President Trump lowered the corporate tax rate down to 21% in 2017, which was part of the Tax Cuts and Job Act. That's permanent. So that does not expire in 2025 like many of the other initiatives that were in the 2017 Tax Act. So what we have now is Vice President Harris, candidate Harris now, proposing to increase the corporate tax rate to 28%. Now, people say, okay, well, what does this really mean? Because if you look at the average company in the S&P 500, just to do a little bit of math, if you look at the effective tax rate, it fell from about 25% in 2017 down to about 18% now, which has led to about a 1% improvement in profit margins. And let's not forget, profit margin expansion has been, a significant component of earnings growth over the last 2 decades and very important over the last few years. And in fact, over a longer period of time, it's contributed to half of the growth in real earnings over that period of time. So if you kind of just do very simple math, increasing the tax rate to 28%, which is what candidate Harris is proposing, it would essentially reduce profit margins by about 1.2%. So it's going to be significant in terms of the negative impact to earnings.
James, it's always a pleasure. We'll leave it there. Thank you so much for joining us. James Abate, Managing Director, also the Chief Investment Officer at Center Asset Management. So the Democratic convention is now firmly in the rear view, and we are told the campaign of Vice President Harris and its affiliates have raised a total, or did raise a total, of about $82 million during the week of the convention in Chicago. And that pushes their total fundraising haul to, are you ready for this? $540 million. That was since President Biden stepped aside. Joining us now for a conversation on this fact is Amy Dacey, Executive Director at American University's Sine Institute of Policy and Politics. And Amy is also the former CEO of the DNC. Good of you to make time for us on a Sunday here in the States. This is a pretty impressive pivot, I think, that the Democrats were able to achieve in, about a month since President Biden stepped aside. They were able to capture this much capital, kind of squirrel it away for the campaign. But everything seemed to go so well for this convention. I mean, the type of planning that has to be involved in an event like this. If you had to grade the DNC, what would you give them, Amy?
Listen, they definitely got potentially even an A+ this week. I think they definitely understood the assignment, Doug. I mean, they came out of this convention with money, a tight message, and momentum. Those are the three things that you want to. And conventions take over a year and a half to kind of put together. A month and a half ago, they were changing, who was going to be top of the ticket. So I think the ability to really have a tight messaging arm, to have incredible surrogates, to have the speeches come. And, as you mentioned, just the money and the resources coming out of this. She even raised $40 million since her speech on Thursday night. So these three factors are really going to help them into this final stretch toward the general election. So
if you were still in a leadership role at the DNC, how would you advise the committee or whoever is involved in pulling the purse strings here and spending this money? What should be the focus? How should that capital be deployed?
Well, I think, there's various ways that these resources are spent. Mostly, it's all about having a conversation with the voters. I think that they're investing directly into some of these battleground states so they can have that voter, to voter contact, to reach out, whether it's on the doors, on the phone, or through social media. I think they're also going to have ads, that kind of help to amplify the message we saw coming out of the convention, and to not only do that, but then contrast the Harris-Walz ticket with the Trump-Vance ticket, and hold them accountable, certainly to any misinformation they feel that their opponents are putting out there. But I also think that they're looking at the map. There are states that are now, questionably, are they in play? They're spending time in Georgia. The question about whether North Carolina is closer than it was viewed, months ago. So I think, as always, you follow where the candidates are going and where the money's being spent. But I think those are the key things that they'll be investing in. I think they'll also try to make sure that they're reaching out to certain communities, that's issue specific, whether it's, into the Black community, Hispanic community, the LGBT community, women, young people. They'll target those different communities through various forms of communication, whether it's on social media, in some of the traditional media outlets, newspapers, on the air, that can get to, micro target and get to these voters to make sure they are not only, feeling a momentum, but also to reach those independent or undecided voters in these key battleground states.
It's kind of interesting because traditionally Labor Day is the marker during which time we kind of pivot away from summer, we move to the fall, and in a presidential election year, things go full on right through to early November. One of the things that you kind of alluded to, putting Vice President Harris kind of in a position where she would be on tour, especially in some of these swing state places. But I'm wondering about how to balance that if you're talking about a debate that happens, September 10th or 12th? 12th is, I can't remember the exact date, but the time that she's going to need to prepare for a debate. How do you negotiate that?
Well, I think you have to definitely devise some time for the debate. She certainly has much experience, in debating. But, what we've seen is whether it was her presidential bid originally in 2020 or, when she became part of the ticket as vice president, she's got that national level debating experience. But you do have to put time aside to prepare. She has a different person across the podium from her. But I think the other thing you saw coming out of the convention, and what I've heard since the convention, is the amazing amount of surrogates we have out there. Now, of course, you want the candidate in these battleground states, but we've got, certainly heard that there's more House members who have been asked to and are willing to be surrogates. We saw some of the key spokespeople who were on the dais, at the convention. They'll also be out there, at events, sending messages through social media and other things. So she'll spend that time preparing for the debate and everything that has to go with it. But she will be, in Georgia. We'll see the other states that they map out for her as well. And then I think you'll see there's no lack of incredible surrogates that are really trying to amplify the Harris-Walz ticket out there.
Very quickly, Amy, in about 40 seconds or so, the degree to which the Democrats right now are prepping themselves for an onslaught in terms of whether it's coming from their surrogates or from an ad campaign from the GOP side. Do you think that they've really firmly established a war room here to guard against those incoming lobs?
Yeah, and this has all been, orchestrated long before there was the switch and Vice President Harris became the nominee. The DNC, as one of their main things, has a research arm, has certainly an ability to do that fact checking and get the record straight. So that infrastructure has been in place. I think it'll certainly be amplified in the days to come as more people are paying attention to the election.
Amy, thanks for chatting with us. Amy Dacey there, Executive Director at American University's Sine Institute of Policy and Politics. She's also the former CEO of the DNC, joining us here on Daybreak Asia. This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.